This will be the first half review of investment property sales in the state of Hawaii for 2020. The second quarter was dramatically off because of the COVID-19 pandemic. To date, there have been $415 million worth of sales, most notably 0 hotel sales. So those luxury hotels often drive sales volume for our activity. In that second half, in the months of April, we only had 14 sales, May 12, and June 15. So the dollar volume off in that second quarter is off 69%. So a lack of transactions, a lack of large transactions. The number of transactions is about half of what it was last year. We are seeing some deals getting done, but a lot smaller deals. There were 8 transactions over 10 million versus a year ago there were 21, so also about half in the larger transactions. Some notable transactions. We were lucky enough to close a large sale leaseback in town here for a client of ours with their headquarters facility and production warehouse. Sonic Health sold their building and did a long-term leaseback in the Aiea area. King Kalakaua Plaza, we reported earlier, and next month you'll see the details on the Amazon purchase of the large land parcel that happened in July for Honolulu. I thought we would look back to 2008 and 2009 and see what we could learn or help to predict the future, if you will. And the overwhelming things that we were talking about back then were pretend and extend. So loans would be extended slowly but surely. I anticipate that we will see that over the next 24 to 36 months in our marketplace. So there won't be a race to foreclosures, but there will be some problem properties that are over leveraged, but it's going to come slower than most investors think. So it's a time to be patient. There is a lack of liquidity, particularly in the debt markets, and that was similar in 2008 and 2009, so that drove down overall volume. But this time there's more equity or cash. That's leading to a difference in pricing expectations, the bid-ask levels, if you will. The equity that's out there is looking for higher returns than pre-COVID. So again, we got a little bit of a standstill because of a difference in bid-ask pricing. One of the things that's interesting that we believed was helpful for Hawaii during that last crisis, that the convention business was going to be strong in 2009 and 2010. And that kind of helped the economy and probably helped us fare better than the West Coast. Well, that's not the case this time. We know that conventions, as we knew them, are not coming back too quickly. And as of today, most of our hotels across the state are still shut. In 2008, the total volume was 788 million. In 2009, it was 627 million. So very likely 2020 is going to be down in those ranges, below $1 billion, maybe 700, 800 million, whereas our average over the past 15 years has been about $2 billion in transactions. As always, you can get in touch with the Bratton team at thebrattonteam.com. Feel free to call us up, hit us up on social media, ask any questions. We're active and out working. Thanks for your attention. Aloha.